The Technology Strategy Board support the development of new technology in business through a three-tiered grant scheme called the SMART Award. The first level is a proof of market scheme for which they can give you a grant up to 25,000. Again, if we look at the funding proportion, that's 60% of the project. You're looking then at £55,000–60,000 project. So if you're doing a proof of market, essentially you're doing something that's going to test out the market for a new product. That's a pretty big project, but you don't have to apply for that total amount. You might apply for £6,000, it says quickly doing the maths, against a £10,000 project. Proof of concept will provide a grant up to £100,000 for 60% funding. That's about 160k project. And again, these are more on the technology side than the service side, up to 250k. So there you're looking at quite high levels. These are quite substantial amounts of funding, but they're against quite substantial projects. All that's on the TSB website. You can be put in touch with somebody who's made successful applications by one of our business support community. People like Science City would know consultants that could do that. People like the BIC in Sunderland or NBSL in Northumberland. There are business support organisations in the North East that can put you in touch with people who have been successful. One thing to bear in mind is to find out potentially how many applications are successful. So the SMART scheme is good but hard to be successful at. Find someone that's successfully got money from there and speak to them if you can. Smaller funding schemes and grants in the North East. Many of the schemes that we have are ERDF funded. So they're funded through the European Regional Development Fund. That's a fund provided by Europe to support our region and support many regions in the UK. Part of the reason we attract funding is that the economy of the North East is changed from large-scale employment in traditional industries, in shipping, mining, steelworks. All regions across the world struggle when they seek to change that large scale to new sort of entrepreneurial or new types of business. So we attract this money, and most of that money needs to be match funded. So it will only pay a percentage of the grant, as I mentioned earlier. The BIPC, the Business and IP Centre at the library, has got funding. This project is run by ERDF grant funds, and we've got a project running at the university where we can do a smallish number, so we can do 30 packages of support for people starting new business ideas and new business projects. And what the university can do is access some of the academic expertise to evaluate new ideas. So for instance, we've had people bring to us propositions which have been developed, and they want them compared to the existing market to demonstrate that they are an improvement on what's available in the marketplace. And that utilises some of our expertise, some of our facilities. That's great. It's only a small amount. It's £5,000. Gives you a door into the university to talk to some of the academics there. There's also, as part of our BIPC project, funding from Science City, and they can help with some business support. So again, that's a part-funded project. It's something which you need to bring some money to access, and they can support you in business consultancy, usually around marketing or potentially in this case in finance, but also in other areas of business. And many of the other schemes that we've got up here are for funding consultancy support. And ERDF lends itself to doing that, and it's an area where we try to bring the support that an entrepreneur needs into that arena by using professionals. The NEEIC is the North East England Investment Centre. It's managed by the Business Enterprise Group down in Seaham. They have a project called Innovation for Growth, and they can provide up to £8,000 funding. Again, it's on a 40%, potentially a little bit less. I think the last person who I worked with that got some I4G funding they were offered 37% funding, so slightly below the 40% threshold. NBSL, their based in Northumberland. They're great. They can provide funding to support business consultancy again. They've got a very wide range of consultants and a wide range of activities that you can apply that funding to. The BIC in Sunderland have got an innovation project. Design Network North have got funding, but I believe that funding's now coming to an end. So get in quick if you want some of that. So those ERDF projects are funded through an ERDF tranche of money that's come to the North East between 2011 and 2015. And all of that funding is going to come to an end in June 2015. Following that, there will be new funding that will come to the region, and that funding will be a combination of European and national UK government funding, and that money will be channeled through the Local Enterprise Partnership. So the Local Enterprise Partnership is a public-private board, essentially, that's been set up to help develop the economy of the region, and these partnerships are set up across the UK. And they're going to be channeling the new programmes and the funding for those new programmes. In the North East, we're looking at how those programmes are being put together at the moment. So if you've got ideas, talk to the LEP. The Growth Accelerator is a BIS-funded, is a UK government-funded scheme to support companies that want to grow. It's aimed at medium-sized SMEs, but will work with micros as well. The first part of it is a coaching activity, which is coaching with the CEO or senior management in terms of how you're going to develop a growth plan. There's two streams of it. One is on business development, which in the North East is run by Winning Pitch. So there's a guy called Colin Smith out in the Northern Design Centre, and there's another stream which is called Access to Finance, and that's particularly about people looking to raise money, and that's run by Grant Thornton. There's a lady there called Joan Lowe who works at Grant Thornton in Grey Street in Newcastle. So that can access a period of work with a growth coach. That's basically you sit down and you work through a growth development plan. Having gone through that, you then are eligible to access their leadership and management grants. The leadership and management grants enable you to access, I think, £2,000 per senior manager in your organisation on personal professional development activities. So again, you can work on a one-to-one basis with a leadership development specialist. So those are not specifically aimed at micro and startup businesses, but they have been used. I have seen them used with very small businesses. In the North East, we've got something called Let's Grow. Let's Grow is the regional growth fund. Again, this is set up by the UK government a few years ago, specifically aimed to support job growth, particularly in areas where the public sector has been trimmed back and we're experiencing job losses in that area. We've got the North East, which I think covers the entire region, has got an RGF fund, and ideally they're not looking at the startup end, but they're looking at if you're currently running a business, particularly a business that has high levels of employment, you want to put on a new production line and you're going to invest in plant, then the government's looking to support that. I'm sure there are other grant opportunities. Many of the ones that are relatively straightforward to access are going to be part funded. If you access grant funding, you can't get another grant to match that funding. You have to bring in private finance, private funds to match your grant. Finance for Business North East are the overall managers of the North East funding that comes from this scheme. And Jeremy funding is funded by the European Investment Bank, the EIB. So in that case, I think that you can match that against ERDF grant funding. Right. So, and you have to be careful because the people that fund the accelerator, although I think there is some angel money in there, most of it is coming from North Star. Right. And North Star are part of this EIB funded proposition. I'll come on my next slide talks about equity investment. You get pittance at the beginning to get through to basically to buy your beans to stop you from starving, and then at the end, if you're successful, then you get a chunk of money. So as you come up to the end, assuming you're going to be successfully funded, you could think about making grant applications during the period that you're in there. And I've seen people pitch that. I've seen people get grant funding offers and go to a pitch event and say, I've got £45,000 offer of grant funding from the TSB, and what I need is another £65,000 to match with that. So if you give me this £65,000 for which I'll give you equity, then I'm already leveraging that money and we're going to get further. Whereas if you just give me the 65 and I spend that, we might not get as far. You can play it, but at some point they're going to want to see that other match amount of money. And the thing I didn't mention, actually, that I meant to mention earlier in the financial packaging side, and particularly in the TSB grants are paid quarterly in arrears. So you need to cash flow the period of the grant funding. So say we get the allocation of the grant at the beginning, and I recruit a couple of these developers. I've got to pay their wages, pay for the workshop space, buy all the kit in, set them up with computers. I've spent a load of money, and then at the end of the first 3 months I do my claim, and then a month or maybe 2 or possibly 3 months later I get that claim paid. So you need to cash flow that period for at least 6 months before you might get the money back from your grant funders, which also makes it important to have more money than just grant money. I know we're in austerity period, but I like debt funding for business, particularly if you've got cash flow to fund it. I like unsecured debt funding, if possible, so that the entrepreneur is not going to lose their house if the debt is called. And some of the places you can get loan funding, there are startup loans, and the 2 places in the northeast that I know of, Transmit Startup, who are based in the International Business Centre in Gateshead, they provide startup loans. Startup loans go up to £25,000 and they accrue 6% interest. The Prince's Trust, I believe, are also an accredited startup loans provider. If you're pre-start, then that's a good place to go. But the trick there is that they want to see customers and the ability to repay the loan. So you need somehow to be very close to market. So Jeremy provides, I think it was about 125 million over 5 years, which comes into this region, but it also comes into a number of other regions in the UK. I think the first place that was funded was Wales. We were the first place in England, and there are now Jeremy funds across the northwest, and I think Yorkshire and Humberside as well. Each region has managed it differently, but in our region, what we did was get this group called Northeast Finance to administer the money, and then they put out tenders for fund managers to manage small pots of it. So we ended up with 6 or 7 different pots of money for different purposes, and this was intended to give a sort of stepwise capability of funding businesses in the northeast. Some of the funding was in debt, and some was in equity, and some was in this thing called a convertible loan. We've got a micro loan fund from Entrust. I think that goes up to about 25. The Northeast Growth Fund from NEL, Northern Enterprises Limited, provides a mezzanine debt fund. Finance Wales Capital, FW Capital, provides the Growth Plus Fund, which is a higher level fund. That's probably not suitable for early stage businesses. That's for a more established business. Again, I've started exporting. I've got a strong order from overseas. I can increase the scale of my business if I could just fund that order. So their proposition is something that could fund it when you know that the income is coming in. Then we're on to secured finance from banks. So basically, if the company has assets that you can put against it. So if you've bought the premises for your business, again, we're looking at slightly larger scale than we've talked about so far. You could put the premises against it. Unfortunately, some people have to put their own personal houses against their own finance raising. Lease and asset finance. If you're buying plant that you're manufacturing, you can often get that financed, which is essentially a rolling payment on your income. But invoice finance is that if you're generating a strong cash flow, you can sometimes get that cash flow funded by invoice discounting. So you've sent an invoice to your client, you know the client's going to pay in 30 days, you can access that money now going through invoice discounting and invoice finance. Invoice financing is challenging. It's not something I would necessarily recommend. It's, again, we go back to appropriateness. If you are growing in a very strong in a very strong rate, then perhaps it's a way to access cash very quickly. There are now some interesting new crowd platforms or peer-to-peer platforms that are looking at this as well. So things like Market Invoice and Platform Black are providing peer-to-peer financing for invoice discounting. Funding Circle provides unsecured crowd-sourced debt funding. And that's very interesting. It's a very interesting proposition. You need to have been trading for 2 or 3 years, really. You need to be trading over £100,000. But if you are, then it's quite reasonable rates. I believe there is a fixing fee of something like 4%. There's an interest rate between 8 and 9%. But it's something that you can turn around very, very quickly. And then there's another two at the bottom, Assets Capital and ThinCats are both property-backed or asset-backed lending. So essentially, if you've got a large warehouse that you own and you can use that as collateral, then there are other sources now, as well as the banks. Going back to the cost of money, you know, if we get equity investment, we're giving away a larger portion of our business, which is always a painful wrench. But with debt, you're giving away the margin on your cash flow. So it's harder to bootstrap when month on month you have to repay your debt, but you get that big chunk at the front, which might be able to give you a lift to the next level. So equity funding. So by equity, I mean you are selling your shares to an investor. So they don't accrue interest. What they do is they own a portion of your business, and if you distribute dividends in your business, they accrue the same share of dividends that they have shareholding. And at some point, if they are professional investors, or even if they're business angels, they want to make a return on that. And the way they make a return on that is for you to sell your entire company, and they get the portion of that selling price back. So there's an expectation that at some point there will be what they call an exit. So in the Northeast, we have these quasi-equity funds that are funded through the Jeremy scheme. The proof of concept by North Star Ventures can fund up to £100,000, I believe. It may be a little bit more now. They have worked on the basis of a convertible loan. Convertible loan is a loan which at some point in the future we might convert into equity, but at the moment we're going to treat it as a loan and it's going to accrue interest. So one of the benefits of going to North Star is that you didn't have an immediate repayment method or repayment timetable. They are under pressure themselves to get the returns that they need for their fund, so I think they're very keen on things that do start repaying very quickly. But when I was looking at them, certainly 2008, 2009, they were happy to be longer term investors. So what would happen is we take, say we get £100,000 in debt, we're looking at maybe a 10% compound interest rate. You wrap up that compound interest rate, and then if you get to cash flow, you can consider repaying that debt. But if you get to a point where you get some more investors, you may convert that debt into an investment. Other funders, Yorkshire Fund Managers, based down in Leeds, got a technology fund, and early stage funders in London, ProFounders, Ariadne Capital or Index Ventures, people like that, have got funds and would be interested in talking to people. But again, it depends on what stage they are of their funds. I would work with a funding professional. So when you get to larger scale financing, so if you're looking at a couple of million or 5 million or 20 million, you probably work with a corporate finance house or a corporate finance partners in an accountants. At an early stage, you can work with those guys. They might be expensive, but you might be able to find individuals who've done this work and consultants that can do this work. The likelihood of success, if you're introduced to a funder, is orders of magnitude higher than if you send your business plan direct to them. If I phone you up and say, I've been talking to this guy, I know him, he's a great guy, you know, he's done this and this, take a look at his plan, already you've got a positive influence than if a plan just comes through the post and lands on your desk. So business angels, you know, getting a personal business angel is good. It's probably difficult if you're not successful because you're losing someone else's money. But if you know somebody who would invest in your business, then that's great. Business angels are good when the business angel brings more than just money. So often the business angels and groups of business angels bring industry experience. And if you can find somebody who could represent your company in wider networks or industry networks, who has got a stake in the success of your company and will also bring cash to your company, then that can be great. Business angel groups in the Northeast. Hotspur Partners is a small business angel group. Rivers Capital Partners has its own business angel network, but also has a co-investment fund, which is also funded by Jeremy. Yabba Group is the Yorkshire Association of Business Angels, and Archangels is a Scottish group. So there are a few business angel networks, and if you go and present to a business angel network, you will be in a position of that pitching environment. You'll be standing up in front of a room full of people and pitching your proposition. Crowdfunding is where you essentially have a platform which acts as an interface between the founders, the entrepreneurs and investors. And I've put this specifically, I've put up equity-based crowdfunding first, because it's the most business focused. So if we think of the angels, business angels, if you had a group of business angels in the Northeast, how do they get to see propositions in the Southwest? It was always a very local thing. In fact, business angels, the term business angels comes from historically funding theatre productions, I think. But in business, informal investments in private companies have often come through networks, particularly professional service providers. So you might have a solicitor on the quayside who is working with a new startup company or an early stage business, but is also working with high net worth individuals. The startup business is looking for money, and he happens to know somebody and mentions it on the golf course. Very quite random events, but things that have happened that can that have brought people together. The coalition government has developed tax breaks for, or has increased the tax breaks for investors in private companies, and there's something called the EIS and SEIS, Enterprise Investment Scheme and Seed Enterprise Investment Scheme, which provide very beneficial tax advantages to investors investing in private companies. So we're trying to formalise, we're trying to do more to get more angels. And then these platforms come along, and essentially they give everybody the chance to be business angels. And it's very much, armchair, dragon's den situation. And you can invest as low as £1,000, I think. Crowdcube is probably the best known. Seeders is coming up fast. In Crowdcube, you would put together a pitch video. You would also have some collateral with that, like a business plan. High net worth individuals would self-certify themselves onto the site. You get to view the investment opportunities and invest in the ones you like. If you've got a company that you're putting up there, you need to think through the preparation for that. How are you going to do a successful raise through an angel platform? And that takes quite a lot of work. It's a campaign that you put together. One of the pieces of advice that I had was, if you have a business angel that's looking to invest in your company, but you also want to raise through a crowd platform, is to get the business angel to invest through the platform. Propositions that are on platforms that reach a certain threshold, 30%, 40%, 50%, have a much higher likelihood of getting successfully funded because people follow that. So say I'm looking for 100k through Crowdcube, and I've got an investor who's prepared to put 25 in. Don't give me the money yet, wait till I put my proposition up, put it in through the site. I've already got £25,000 invested. I might put some money in, or some of my family might put some money in. We're up to £30,000, £40,000. Suddenly there's a momentum there. And it's those sorts of strategies that you need to think through in using the crowd platform, and the ones that are successful. So learn what works. I know Crowdcube run masterclasses, so go on one of their masterclasses if you want to find out, because it's in their interest for you to be successful. They want people that use their site to be successful, so they're not going to withhold this information. It's just that you need to go and find that out. And non-equity based crowdfunding, so things like Kickstarter, Indiegogo, Crowdfunders UK, BuzzBank. So these guys are interesting for business. Many of them have started for things that aren't strictly business, or are in the community or cultural space or the social enterprise space. And really reward people for making a donation. However, they've also been used to raise money for business. And one of the things that you can do with a platform like that is to pre-sell your wares. So if you're going to make a product and I need 25,000 for tooling before I can actually make the product that I'm going to make, what I could do is I can mock that up in a rendered image of it, so it looks like a final product, and then I can put that onto Kickstarter, and we can pre-sell that. The other parts that they do are reward-based, so just by being involved, you can be rewarded for committing to Kickstarter. Things that start out as, here's a way to fund an album, or to fund a new play, or to fund a film, have evolved into, why don't you pre-buy my product on Kickstarter, or why don't you invest in my business on Crowdcube, or why don't you lend me some money on Funding Circle. And so these things are evolving very, very quickly. We Fund are looking very much on creative projects, and Abundance, they're interesting as well. I'm not looking at it straight right now, but the Abundance are loan financing, renewable energy. So if you're building a wind farm, you've got an idea of the income coming in over the next 25 years. And they're taking debenture investment. So they want you to invest for 25 years in their wind farm, and they'll give you 6 or 7% over that time. And some people are looking for investments over that time. If you're investing for your grandchildren, you might take a 25-year investment. And there's some quite big companies that are on there looking for investments. So this is changing very, very quickly, this area. Try and find somebody who's got experience of raising through crowd platforms. Key points that I'm trying to get across today is think through that financing journey, package the finance that you get so you can leverage different sources of finance, prepare before you go in and talk to funders, be they grant funders or equity funders, make sure that you've got the collateral to be convincing and to be exciting for investors, show investors the commitment that you've got to make your business successful. And that's everything for today. Thank you.